to the RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. This is our public broadcast. Hopefully, trying to get towards this 15-20 minutes. Seem to be stalling out around half an hour these days, but maybe by the end of the summer we can have that down into that window. Anyway, let's try and shoot for being done here by the bottom half of the hour here. So here we are, now 17th of July. So now we're well past halfway through the merry month of July. Hope you're enjoying the summer. If I understand correctly, it's hot outside. What a surprise. It's summer and it's hot outside. Funny when you read the media, it's like, oh my God, it's the end of the world. It's 100 degrees. This is global warming. Everything the scientists said was going to come true. It's like, excuse me. I mean, it's summertime. This is what's supposed to happen this time of year. Oh, well, what can you do? Anyway, more rhetoric than anything else from the Beamish. But we have an action-packed episode here for you today. Unfortunately, YouTube is actually won't let me see the streaming channel. I loaded up there before Chris hit the button. It's just not loading here, so I can't see what you guys are saying. My apologies. Would love to say hello to whoever's watching. Hey, there we go. Yeah, finally, it kicked in. Of course, as soon as you say something like that, then it's like, all right, now it'll work. Anyway, so start off breadth indicators readings. I mean, we're only at 60 here on the S&P, so I wouldn't call that insanely overbought. Having said that, ironically enough, actually, the breadth is still technically negative right now. So we'll see. We are starting to see some chinks in the armor here today. And I have been sort of, cautioning, warning, a little bit of concern that all it's going to take is somebody to sneeze, and we could start having some pretty big, ugly, bearish divergences starting to confirm. And I think somebody just sneezed. So interesting. Julian, of course, loves his RSI study. So it is interesting to see that RSI itself is actually the first momentum indicator here to actually go and confirm divergence here. So you can see, maybe you can see it better if I put it all on one screen. Market made a high, RSI made a high, market made a higher high, RSI did not make a higher high. And now, as you can see with today's weak price action, that M in RSI is actually confirming. So there's a nice, cute little tutorial for all of you on what the heck divergence is. It is interesting to see MACD here is flirting with heading down into the negative. Oh, it is going negative. You could argue that RSI div that you see there, boom, 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 that actually also is in MACD as well, the histogram. So I got the distinct impression that we are getting that break that is finally going to start firing the divergence signals. And, El Tangonator, the setup by... geez, I learned probably 30 years ago with good old Ken Roberts. Mind you, he didn't use momentum in his models because he would just be looking at the price chart that he got in the mail, and momentum indicators wouldn't update on things like that way back when. We have been, of course, talking quite a bit about this PRZ, potential reversal zone, the bought profit objective, which was hit, what, 1, 2, 3, 4, 5, 6, 7, 8 trading sessions ago. And you might argue with the bearish divergence that's forming, this was just basically all fluff up top here, which is kind of a shame because some of the brick and mortar names are starting to come to life. So what the heck is going on here? And interestingly enough, as you can see, our on the itinerary there, our big goal here at TRI is building out this platform and signaling system. And I have to say, I was pretty darn impressed. I think I mentioned it the other day. I don't know whether I did it in the free broadcast or I did it in the after party, but I absolutely love key reversals. And I was pretty shocked the other day on the 11th in particular when all of these tech stocks all spat up key reversals. I mean, this is technology sector ETF actually spitting up key reversals, consumer discretionary spitting up key reversals. Lam Research, which is kind of like a semiconductor parts manufacturer in a way. NVDA, of course, everybody knows that. KLA 10 core. Actually, that dates me. If you know when last time this company was called KLA 10 core, then I know that you're an old timer in the market. Qualcomm, I think we pulled up the Qualcomm chart, and Qualcomm actually had busted its key reversal. But it is fascinating to see all of these key reversals. So the market knew something. And I think this is a really good analogy, especially, TRI students. We're all students of the market. If you really want to sort of learn how to play this game over the long term, Adam over there, Nore, Constantine. I mean, you guys are here day in, day out. You guys are students of the market. I completely endorse you guys. This is the kind of message that you need to hear from the market. It might not even set up a trade, but something is brewing. Key reversals don't come out of nowhere. They're actually incredibly powerful signals. And if we look at them, it's interesting, this Progressive Corporation. I mean, look at the size of the key reversal on this thing that fired yesterday. Boof. Wow, what a mess. So anyway, just the point being that, that Qualcomm did bust that key reversal and the signal never did fire. But, there's it's more like that there's a message from the market, and are you hearing the message, right? Oh, God, no, stupid platform. And of course, we're still dealing with stock splits on the platform. So unfortunately, this data is I can't even really use it. Anyway, hopefully Stuart will be back from vacation soon. Hey, there we go. Oh, geez. Now let's see if I can get the darn thing to even show up. Oh, my goodness. Look at this mess. Oh, well. Anyway, one day, never been closer. You've heard it from Brian for the past 10 years. There's that Lam Research. It's key reversal confirmed. So the point being that we're getting a lot of signals from the tech sector. And of course, the tech sector has been kind of leading the charge here. And interestingly enough, our Dutch buddy, Sjoerd, he's actually been quite enamored. Well, not enamored. I mean, he's Dutch, so obviously he's going to like Dutch companies. But it was interesting to see that this ASML, which is a big Dutch semiconductor, parts manufacturer, all that kind of stuff. They primarily do their business in China, and you can see it got absolutely destroyed today. Why? Well, actually, there's like a twofold situation here. Number one, Mr. Biden. Mr. Biden hasn't gone away. I mean, he's still fighting tooth and nail here. So got to give it to him at least that. I mean, hopefully he'll make this a horse race into the actual election event. Anyway, he came out overnight and slapped on some major, not necessarily tariffs, but if you are doing business with China, then there is going to be issues around U.S. agencies dealing with you and your company. And obviously, ASML, they do most of their business with China. I think the headline even here today was big tech stocks fall, blame ASML, Trump, and a shift to small caps. But, I would actually agree. I like the small cap sector right now. We actually had a really cool TRI SOF club meeting last night. And geez, a number of names that I would not have expected are actually looking very bullish. You want to see one? For example, I was actually really surprised at this. But and of course, anybody who's in the real estate sort of game, or thinking about buying real estate, you probably don't want to see this. But I was quite surprised when I saw, where is it? Nope, not there. And this is where I always fail with these videos. And if we, I am thinking about just moving all of this to after doing this, recording it, and then editing this after the fact to make these videos for YouTube a little bit smoother. Because me scrambling around looking for price charts, it never works very well here. And I think that's half the reason why people don't like watching these videos, because I get all scatterbrained. Anyway, what I wanted to show you was, and I thought I got it ready here for the conversation with you, but I don't see it on here. There we are. Look at this one. Son of a gun. Look at that. I mean, anybody that's been working with me appreciates that I absolutely love when I see divergence. And I love it even more when I see OBV divergence. Like it looks like, I don't know whether, yeah, actually does look like we went to new lows here. Might have been slight. Oh, no, actually it's a little bit higher. But beautiful bottom in volume here. Look how long this divergence has been playing out here, way back here. Willie has gone stupid here a few times. And look at that beautiful W. This is a weekly price chart. What the heck is this? This is Redfin. These are these real estate proxies. So is the real estate market getting ready to ramp up again? Was interesting, last night in our SOF club meeting, this is one of the names that jumped out at us last night. And it's fascinating because if you go on YouTube and you listen to the experts, they're all calling for doom and gloom. I mean, they have been forever. And I think that's the way you get clicks over there is, oh, the sky's falling, click on my video. Right? And then you get hits and likes and all that crap. But somebody actually pulled this chart up and said, that's a really bearish chart. Look how ugly that is. And I went, no, it isn't. That's actually pretty damn bullish. So that surprised me quite a bit. And then what was really interesting, of course, is that we're coming into the first 2 weeks of the quarter, which means that we should probably keep an eye on what sectors are outperforming and underperforming, and look at one of the sectors that's really outperforming. Real estate, and then over here, discretionary, Allen's stock, of course, has come back to life. And interesting how we have utilities over here also outperforming. I'm a bit surprised that the financials didn't report very well, but I have been noticing the financials have been ratcheting up here recently. But interesting to see how real estate is outperforming here, right? And so, like, where does that put us in the economic cycle? Early recession, full recession, market bottom, somewhere in this area? Is that what the market's trying to tell us? Anyway, certainly not over here, that's for sure. But it is interesting to see that these real estate proxies are starting to look very, very interesting here now. So don't be surprised if you hear me actually seriously want to take a position in that stock. I mean, fuck me, that thing looks beautiful. So, and interestingly enough, like I said there just a moment ago, the tech stocks, they kind of look like the exact opposite. I mean, what letter of the alphabet is that? Wait a minute. I thought these things only went straight up, right? And there's that key reversal signal. God damn. And the interesting thing is this is a bearish engulfing bar. So as I said there to start off the broadcast, what you really need to do in this game, you may not even take this trade, but for Pete's sakes, please respect what the market is trying to say to us. And I often notice this, right? If I was going to write a book or something on the market, the one thing that I don't see the public do enough, like when we were going into that peak in crypto there back a couple months ago, you needed to listen to the market, right? And, I mean, we started tongue in cheek. Anybody who doesn't have any idea what the heck I talk about or relatively new, you're not going to know my references. But, hey, there's Eddie. Hey, buddy. Hope the renovations are going well. Adam, obviously Norre, Constantine, all the regulars. I'm sure I haven't even looked who's in the call with me here today. Do we have anybody in the call with us? Hey, good old Glass Insights. He's been here day in, day out. I mean, the point here is all of you regulars, you should be getting to the point now where you can hear the market speaking to us. Like when people say, oh, this time it's different, that's the market speaking to you, going, uh-oh, you better be careful. So anyway, the point being here, key reversals, bearish engulfing bars, M's in price. Of course, the asset ridiculous nosebleed up. Look at the bearish divergences. Look at, Willie stupid. The whole point here is there were lots and lots of messages that you better be careful here. And sure enough, this part of the market's really suffering. And I also might argue too that I think that these tech stocks actually do better under things like a Democrat president. The dot-com boom, for example, that happened under Bill Clinton's tenure. So you might even argue that when Obama got back into office, that's when the tech stocks actually bottomed and started to come back to life. So really seeing the change of wind here, not only in like tech stocks themselves, like technically speaking, but also now the rhetoric that they're going to start clamping down. The Americans themselves going to start clamping down on things like ASML for doing business with China. It's starting to have serious repercussions, and this ASML got just hammered today. I'd also say too, and really you look at the fundamentals, oh boy, this looks bad. 28 times book. Is Brian ever going to invest in a company that's trading 28 times book? And this is even after they came out with their better than expected earnings. Or maybe it isn't. Maybe this is still the old number. Ironically enough, the earnings numbers themselves are actually pretty respectable. But the Biden news, I think it was just too much for this thing, and it got hammered. Also, on top of that, Mr. Trump has come out and said that he actually would like to see Taiwan actually pay for the US military's bill. And frankly speaking, I actually agree with that. I think that's a fantastic idea. I mean, it's the same thing with Ukraine. I don't have a problem with the West supporting Ukraine. I don't have a problem with the West shitting on Vladdy. I mean, the guy's a totalitarian dictator and he'll murder you. And I mean, accidentally Brian fell out of his apartment window. Do you think that was an accident, or do you think maybe one of Vladdy's henchmen helped him over the edge? I mean, I doubt I'm even remotely significant enough to warrant such attention. But don't kid yourself. Vladdy will kill you in a heartbeat if it serves his interest. The point being that why don't we have like GoFundMe campaigns? And if somebody wants to contribute to the Ukraine war effort, great. Create like a fundraising drive, right? Pass the basket around the church. See if you can raise money that way. But actually mandating, what's that? Too many beers? Can't type. Okay. Hello, Mark. Anyway, mandating that taxpayers have to subsidize the U.S. military-industrial complex, and really all that is corporate welfare. Well, I don't really agree with that. And frankly speaking, with Taiwan, I actually like Mr. Trump's attitude. Look at Taiwan. I know you got troubles and you got a big bad M and he's sitting over there. And if you want some help, we're more than happy to help you all I want. But we're bankrupt right now, by the way, people. I mean, how many times have I shown you that debt clock? None of us in the West have any money to be handing out. So the fact that all this corporate welfare and stuff going to American military industrial complex to help countries like Ukraine, we don't have the money. And especially in a country like China, we don't even have money to fund our own military. We can't even meet the 2% of GDP requirements for our country's contribution to NATO. And yet we're handing money over to the Ukraines right, left, and center. I mean, this doesn't make any sense at all. So anyway, that's the woke agenda, and it just disgusts you. It's disgusting how, it's, corporate malfeasance to the utmost. Anyway, blah, blah, blah. Brian getting all excited. All right, so point here is tech stocks taking a major punch in the nose, and I do like this from both a Republicans coming storming back into power, which of course supports more like commodity industry. I think the oil industry will do very, very well under Mr. Trump. Ironically enough, oil prices will probably fall under Mr. Trump because he's just going to give them the green light. You want to drill, get out there and drill. I would imagine agricultural, the farmers are probably going to do a hell of a lot better. Miners, people in the commodity business. And I might argue that the tech sector has been, kind of a free ride here under the Biden administration. And I think it's about high time that these high flyers now start coming back down to earth. And maybe let's see if we can get these companies to actually trade at half decent valuations again, because this is ridiculous. I mean, this is just one particular instance, but interesting how I pointed out on the system, the outside downside key reversals and the bearish engulfing bars. And I'm just pulling up this chart, ASML on FinViz here, and you can see the engulfing bars. You can see the M top here. So you can't argue that the writing wasn't on the walls, that this thing was getting a little bit dangerous. All right, so we talked about semiconductors, we talked about China trade, we talked about Trump and Taiwan. I did find it interesting. Your friend and mine, Joey Diamond, is thinking about lobbying to become the next U.S. Treasury Secretary, which is an interesting spin because Mr. J.P. Morgan was, of course, the one who created the Fed. Of course, I think he did it at the behest of the Rothschilds when they bailed him out and basically bought up most of his bank. And keep in mind, Goldman Sachs basically has owned the U.S. Treasury Department for quite a long, long, long period of time. So it'd be interesting to see whether Joey actually does take that Treasury Secretary position and whether he's maybe at odds a little bit with Goldman going forward. Maybe Goldman's kind of like, you know what, we've carried the ball too long now. Let's shift gears. Anyway, we'll see. Only time will tell. I suppose to end off this free broadcast, quick boo at things like crypto. And if anything, I think what's happening here is kind of like along the lines of the tech sector. I get the impression, I mean, I would say that I think Bitcoin's already topped, and there is the top. Really, all this rally was basically what they call a dead cat bounce. I think we had a number of levels, and this was really cool. I don't know whether I talked about this publicly, but I definitely mentioned it in the site video, and our sort of talks on the weekend and stuff with site people. On the event of this bottom coming in, then you can start drawing things like chaos theory, of course, reload zones on counter trend rallies back up top. And then also things like extension levels and parking garages. And actually, it was interesting. I had a great conversation with the level 3ers, sort of putting all of these pieces together, trying to explain the differences. Keep in mind, if if you're relatively new to the site and you're not in the education program, you can always go into our library, and we have tons and tons of resources in our library to help you try and learn and understand this stuff. Here's our library. Actually, I directed all you level 3ers, whether it be things like our various different site members doing special video presentations on their use of information out of the market. We had Bobo and Raf over there in the UK. And actually, I just heard from Raf recently. So hugs and kisses, guys. Hope you guys are doing well. They did a presentation on chaos level, but also too, and actually there's Joe. Is that my Oregon ex-Coinage Joe? I've been thinking about you, so I'm glad to see you're there over on YouTube. But we also have in here a bunch of third-party videos and stuff here to learn about chaos theory. And I also have in here how nature in the markets works. So if you want to learn about things like fibs, how the Mandelbrot set works and the Mandelbrot zoom, fractals in nature, and of course Feigenbaum's work together with Mandelbrot. So the point of the matter here is, if you want to learn this stuff, our library, we've basically put together all the resources all around the net to really help you really learn this stuff. So by all means, the image that you see right here, actually, I did, and actually, I'm speaking of Joe. I did a video for those Coinigy people. I think we should probably delete those videos and basically kill all contact with Coinigy, though. And so I don't know whether you can sabotage that from where your side, Joe, but I would actually be perfectly fine with that. I took it personally what they did to you, you know, fucking anyway. So point of the matter here is all of these fibs, chaos levels, parking garages, they all pointed to a confluence of levels 1.618, 2.618, 0.618, 2.0, you know, parking garage, blah, blah, blah. And what a surprise. Look at what happened here. This is so freaking cool. So as the market's working into these levels, right? Talk about trade location. That's a trade location if I've ever seen one. So market's working its way up into trade location. Then you look down at your indicators and you notice on this push higher here, look how everything went into divergence. I get really nice and stupid, MACD in divergence, and even the buying volume itself went into divergence. Now that's interesting. Don't see that every day. And so really it's just a question of, you know, if we get some sort of M up here, well, you got all your three reasons. You got location, you got indicator confirmation, you know, Willie's stupid, and now all we're looking for is price structure. And I actually think you could make the argument like aggressive traders. And of course, this is definitely going to be a function of your skill set. So, you know, if you're brand new to this, don't try and run before you learn how to crawl. But I wouldn't have a problem if some sharpshooters were actually in there hitting. That's an inside bar, harami, even at that. I'd call that a bear rami. I don't really like that as a harami, but nonetheless, Japanese would call that harami. And they're the ones who created this, so I guess they would know. And sure enough, here we come, working our way back down. Probably in the short term, we're going to go after this low here. So we'll see whether what number is that. That's 62,446. And maybe what happens is this carves out some sort of head and shoulders top up here. But the long and short of it here is the dead cat bounce off of the bottom. I think it's exhausted itself. And if I understand correctly, a whole bunch of Mount Gox coins have basically been released to be sold. So if anything, congratulations on all the people that got screwed over by Roly Poly Oly a decade ago. You finally got your vindication. Now the question is, when do I get my Cryptopia coins? Still waiting on those guys. Anyway, point of the matter here is this is looking very heavy here now. I wouldn't necessarily, well, actually, no, I'm just going to leave it at that. I'll just finish off with still working this Ethereum short. Interesting how I had conjectured, I think that's a word, the other day about whether we could take this high out and close out above it. You see that the market worked up into that level. It hit the 2.618, foggy off of the lows, and it just stalled. So we'll see how she behaves in here. But I did point out to everybody the other day, and I still feel very comfortable about this. I think this is our playground for the time being. And it was really interesting to see, were they going to be able to get this thing all the way back up to the original top and stop me out? And it turns out that they stalled right at basically a pretty significant horizontal support and resistance line. Now you might argue, well, maybe, Brian, this is some sort of inverted head and shoulders, which means that we probably need to come back down and play with, excuse me, play with these moving averages as support. And then if we can turn back up in earnest, well, we might have ourselves actually a very well-defined price continuation pattern. And if that's the case, in fact, I feel pretty comfortable about this. If we do actually pivot here and start turning back up, I think I'll move my stop up to these highs, and we'll just exit this short if this inverted head and shoulders does fire. So let's see how this plays out over the next, this is a daily chart, so probably over the next few days. And because we just made a new high here today, at the very least, we're going to have to see an inside bar tomorrow. And then the day after that, we would actually get some sort of fractal sell signal. So it's way too early to call any sort of tops here right now. I think right now what's happened here is the dead cat bounce off of the bottom, exhausted itself exactly where it should have. And now the market is just simply asking, do I want to just consolidate and then continue moving higher? Or do I actually want to top out? And I think our job as technicians is just to simply watch and see how price structure develops here. Okay, I think I'll leave it at that. Have yourselves a great rest of your day. PMA for the win. Oh, I was about 5 minutes over my objective, but what the hell? I think, well, if I end right now, we'll basically be at a half an hour. Hope you enjoyed that summary. You got some value out of it. PMA for the win. All the best. And the only thing left Brian say to you is bye for now.